Good morning, traders. It's 8:03 a.m. Chicago time on Thursday, the 29th day of February 2024, the last day of February. This is episode number 2629. Quick reminder that derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. So what have we got today? All right. Well, first and foremost, I'm back in Chicago, back in my office in Chicago. It feels great to be home. Lots of travel, actually traveling next week as well. So more of that coming. Um, so what do we have? We have a market that's got a mild risk on tilt. We have the S&P. We'll go through them. The S&P has, at this point, on a relative basis, the relative range is 148%, relative volume 145%. The NASDAQ 156% on range and 122% on volume. The Russell, really the big mover today on a relative basis, 164% for range and 168% for volume. And the reason I'm giving you these is to describe the relative action that we're seeing so far. By contrast, crude oil relative range at this point in the day is only at 88% with volume at 107%. With gold, 150% on relative range and volume. So right there kind of gives you an idea of what's moving around. As far as earnings, nothing too fantastic. We have Helion reporting for the year. They missed by over 50%. This is a $14 billion of revenue. And then we have Canadian Natural Resources, which is pretty important. $7 billion in revenue, $1.72 versus $1.60. And it says here Hewlett Packard's is reporting after the close, but I thought Hewlett Packard was reporting yesterday. This calendar must have been wrong or something because it's showing again today. What are the overall themes? Not too much today. Salesforce reported a beat by 3 cents, announced a $10 billion repurchase. U.S. Congress has reached a funding deal that had a March 1 deadline. I think it funds the government through September, something like that. It's just a silly cat and mouse game that these guys play. French and Spanish prelim CPI comes in hotter than expected. Best Buy beats. And German prelim CPI actually comes in better, Germany being the bigger economy out of Europe. U.S. initial claims come in higher than expected. Initial claims came in at, where are you? 215 versus 210,000. So we're seeing a pattern of higher claims, potentially payroll softening. So that's an important one. Of course, we got core PCE this morning. That was the number we've been waiting for all week. Came in line, and the market shot up. Personal income jumped up 1%, expected at 0.4. Personal spending stabilized at 0.2% as expected, the prior 0.7. So income is higher, spending is the same. Core PCE pricing in line. There's more money. There's more money to purchase prices, which seem to be stabilizing. So those are the main pieces coming in. PCE price index year on year came in at 2.4% in line with expectations, which is lower than the prior 2.6%. Again, I want to remind you the core PCE is a pretty important input for the Fed. So the market responded accordingly. Got a lot of volume off that number. At 9:45 today, 15 minutes after the open, we get Chicago PMI. Chicago PMI is a private number that goes out to subscribers at 9:42. So you're likely to see a flutter at 9:42, expecting 48 there. And then it comes out to the public at 9:45. You know, if you have whatever it is, $20,000, you can buy that number ahead of 3 minutes ahead of everybody else, or us peons, peasants. We do have pending home sales at 10. We have Fed's Bostic speaking at 10:50. We have Fed's Goolsby at 11. We have Fed's Mester at 1:15. And then we move on to the APAC area with unemployment rate out of Japan. And then we have Fed's Williams at 8:10 this evening. And then the two big numbers out of China this evening, MBS manufacturing PMI, and then the Caixin manufacturing PMI, Caixin being a really important number that tells us what the manufacturing sector looks like for China, which is in a bit of a bear market. The S&P is in a multi-distribution profile. 269,000 contracts have traded so far, and the inventory's negative 24%, telling us 24% of that volume is short, not significant at all, but the range is significant, 39.25. This overnight session took us through the 50-67 we've been talking about all week. Took us through, and the expectation if we went through the 50-60, unfortunately in the day session, was what? 52 would be on deck. From 67 to 52 would be next, and that would take us through the excess low of last Thursday, but we bounced on this PCE number. That takes care of this convergent trading pre-market summary sheet. The crypto market is just on fire. We took back the 60,000, which has not been exceeded since January 2021, I think, is the last time we were at 60,000 or so. So if you hold Bitcoin, you're doing pretty well. Okay, let's look at the charts. Let's look at the charts. Here's what the S&P looks like. The S&P was well on its way down into that, below that 67. Yesterday was an inside day. We held a pretty weak low yesterday, held above the 67, and then we broke through, pretty clear run down, and then it just kind of sat sideways from there. So all in all, the European markets opened and it just flushed immediately. We saw a flush in the Bund as well. And then from there, they just couldn't do more. Consolidated until PCE came out, and then PCE right here, quick little zipper, and then it took a while for PCE to come out. I mean, that number seemed to take like 20 seconds. And then as soon as it came out, we have a nice little push, pretty decent pullback right there on the break to get long. That's and then if you miss that one, this one's set up. But the problem with this one is it was right up against the overnight high. So this one is a little bit tougher to take. But overall, we're back at 5,100. We're back, baby. So we've broken in the overnight session yesterday's low and yesterday's high. So this changes the game a little bit. We've got the Delta being pretty strong positive this morning. Pretty strong positive this morning. If you look at Delta, you can see it popping right here on the PCE in all three divisions of how we break down participants within Delta. So there's a lot to deal with there. Here's the overall picture. If you recall this chart, balance is right up here. Again, we are back in the 50-92 to 51.10. That's your balance zone since last Thursday, basically. The upper distribution confirmed on Friday and then held on Monday, then tested from below on Tuesday. Then yesterday was a non-starter, really. Yesterday was just a balancing day, little excess at the low, open towards the lower end of the range, little excess at the low, and just basically a balanced day is sideways. We settled at 50.81. So the question this morning is the scenario is very clear this morning, in that we're opening back in that balance zone just like we did on Monday. And the question becomes, hey, do you take out the now formerly resistance and now support at 50.92, or do you take out the 51.10, or do you sit in between and take a breather, right? So if I look at the calendar for tomorrow, we don't have anything really incredibly significant. It'll be the first day of the month. We do not have unemployment and non-farm payrolls tomorrow. We do have some key numbers, inflation out of Europe. We have ISM manufacturing PMI, and then we have a parade of speakers, Fed's Logan, Walter, Bostic, Daly, and Kugler, all of them speaking tomorrow. But overall, this thing, it's really, I don't want to say binary because it can go three ways, but trinary. But, you know, this morning I have got to see one side take over and just absolutely forbid the opposing force to come back. In other words, I want to see it. If it's going to break lower and we end up with a gap to settle trade where we just go sideways and then fall out and go back to settlement, I would want to see that once it falls out, that the pullbacks are extremely weak to go with a run towards yesterday's high, 50.88, below 50.92, and then we're looking for settlement, and then we're looking for it to come right back to 50.80, 50.80 being the key balance target that we've established over the last 2 days. If it takes out the 51.10, we have a small excess at the top here, as you can see, single prints up there, small excess at 51.21 or better. We don't have, it does have a double distribution structure from last Friday, but you can see the majority of the volume occurred below the 51.10.12. So if we take out the 51.10.12, it is very likely to gun for the high, as very little will likely stand in its way in terms of resistance. So that's the lay of the land here. If on the off chance that a bunch of people got caught on the long side for the core PCE number, on that off chance, and we end up pushing through 50.80, then we're looking for the overnight low is within this string of excess singles. So if we get below the 50.80, I'm going to be looking for 50.67 to go, and then for it to really run. So if you're in a short and it ends up pushing through the gap to settle trade, pushing through 50.80, it's an opportunity to add on and hang on for a retest of 50.67. If that breaks, man, that's going to be a sweet run, probably the biggest trade this week. So we'll see. I don't have a bias this morning because we're back in balance. We've broken the one-time framing down that we were in on the daily since Monday. But my position right now, or my view on the market condition or the imbalance, is neutral. It's neutral. I'm expecting it to be balanced, and it could go either way. So I don't have a scenario 1 or 2 because I don't have any confidence as to which way it wants to go. It ran up pretty decent this morning from where it was and retested the 5100, went to 5100 and a half, and now we're stuck in the century figure zone on the open. So hands off. So we're back in last week's balance, or balance since last Thursday. We're up against the 5100 century figure. We've tested and jumped up from lower prices, so you could see that sellers are not able to hold on to those lower prices. We may have found buyers, but we have not yet retested and taken the 5110 to 5112. So I've got to wait this morning and see. And it may take the first hour and the IB break for it to say something. And it's got to say something. I don't want to do what a lot of traders do. You watch what traders are doing and talking about, and everybody's anticipating what the market's going to do. People who trade professionally and trade long-term, they don't anticipate what it's going to do. They wait for it to breach, and then they trade the pattern or the structure or the setup or the order flow or whatever your method is. Pick one that supports that break. So we need to see it rather than anticipate it. If you're anticipating, you're in a world of volatility and pain when it comes to trading. It's very stressful to do that because you need the market to confirm what you think, and the market couldn't give two poops about what you think. Look at the NASDAQ. NASDAQ right back to balance. It's trading right here, right now, right on top of this big balance area. The NASDAQ's in the exact same position. NASDAQ has been relatively weaker since the NVIDIA pop, as we talked about. It kept drooping and drooping and drooping. The NASDAQ provides the same kind of look. The NASDAQ has to take out 18,060 to the upside, or it is likely to come in and breach into yesterday's range. And if it does, we're looking at 17,915 on to the downside in the NASDAQ. Crude oil, so we can wrap up. Crude tried the 79 handle, tried to push towards 80. Range extension down, came right back to the target yesterday. Was 78.32 right here, 78.32, which was the prior day's balance, and then just pushed through by a little bit, and then has been sideways since. So you can see crude oil is just holding on to yesterday's range, and it's holding on to the balance over the last 2 days. Every time we push into that 80, crude has a hard time hanging on to those prices. Expecting more balance in crude. It's been stuck here since the beginning of February. Okay, so crude has pushed up and broken higher in February as more and more trouble has showed up in those areas that produce crude, with supplies being cramped by the Red Sea issues and things like that. But it hasn't really run. It's having a hard time holding on to higher prices despite conditions that normally would favor much higher prices. Good luck today. I'll catch you tomorrow morning. Take care.